The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Good afternoon, everybody. This is Mark. We're back here for the daily recap. Should we ring the bell? Ding, ding, ding. We're at highs. We're at 5-year, 6-year highs. Doesn't seem like a whole lot of people are still involved. That's my outside opinion. Certainly not as much fanfare, which I think is a good thing. A lot more broad based and which is what I want to see. The S&Ps, quite frankly, guys, we've been in a nice little range for the past better half of a month, 2 months, and we finally broke out today, confirming in my opinion, which we've known for a while, that this rally should continue for a period of time, and you'll get retail continue to come back in month over month as we grind higher. I don't think it's run away from us. I don't think it's ending anytime soon. Obviously, you can always get a rug pull here and there, but that seems to me, at least until something changes technically, and certainly obviously economically or worldwide, it's still a buy on pullback. So the S&Ps opened up today. Every industry seemed to be relatively strong. The banks, which have been leading consistently, and they've really had the leadership, they gapped up. They didn't really close very well, but to me that just means a lot of people just took profits at the throughout the day, how JP, and they might need a few more days of digestion before they're ready to go back higher. But at the same time, I don't think anything has changed in the dynamic of what the stocks are doing. I just think there's some profit taking early on. Best in breed. Continue to say it. Continue to be in it. You can really try to reinvent the wheel and try to find new opportunities, which is always a good thing, and do your work. Or you can be in the stuff that really is just trending and it's the best in breed, and every time we get them tick up, these stocks really are the first ones to go, and they really go the farthest and the fastest. The Googles of the world, LinkedIn. I would even put, if I'm a biotech, Celgene in that category. Amazon, not as much, but Amazon closed strong. Netflix, 2-day sell-off, 1 more day down, I'll probably be buying it. That's how you have to look at this market. Priceline, I would put in that category. It's trading well. It's trading at yearly highs. So Expedia, looking good. So you have a whole lot of stocks to look at from a point of view of the best in breed, and then you have a whole lot of stocks, quite frankly, that are just decent stocks from a day-to-day point of view, but really are not go-to stocks on a consistent basis. Apple today certainly was a standout. Had a nice little pull-in, closed fine. Still nothing there to tell me that that the trend has changed. I am a little long from lower, but that pull-in was pretty vicious. Again, nothing has changed. We're still in a long-term trend line. So, if it gaps up tomorrow, I'll probably be taking a bunch off, regardless. And it might just ping pong around this area for a period of time, and just respect the fact that it's Apple, so can trade $10 every single day, and really nothing has changed from a macro standpoint. That this stock is still in a downtrend, ideally, and you're probably going to need some catalyst, some news to really change that direction, at least in the near term. Other sectors that seem to be okay. You had MA. I'd put that into financials. Visa didn't really close very well, but looks good overall. CMG, which I've been in for a better part of certainly a few days, reached new highs, got over its 200-day, closed fine. Looks like it's going to go higher. I did take a bunch off, and that's just being prudent, taking trades across the board, and that's what you have to do. I know we had at the end of the day, we had some craziness with some of the Chinese guys. Found to go private possibly. So had a big move, went all the way down to 40. I think misinterpretation of the news, and almost at yearly highs. And some of the others reacted in the T's, but I didn't really react that much. But CYOU, I think, was the other one that reacted pretty well. So interesting note. Retailers Standouts today, really from a trading point of view, not much, but looking good and a lot more constructive on the chart. You had Coors, I still think looks good. Nike is very tight. Under Armour is getting interesting. Let it be above 50 for a period of time. I think it's going to make it, eventually, it looks like it's getting close to breaking a little bit of a downtrend that it's been in for, at least better part of 6 months. To me, that's probably going to be a trade I'm going to look at tomorrow. We'll have to wait and see. I'm trying not to overtrade the crap stuff, the stuff that really, quite frankly, is in the top third of the trading range. Doesn't give me my intraday movement that I want to, and I think a lot of guys really fall into that trap. I keep hearing whether it's Facebook or BBRY we haven't heard a few times. You gotta stay with the stuff that's best in breed. Certainly, at least from an intraday point of view. Facebook, I think it looks fine. I just think it needs another day or two in this area, and then it probably goes higher, in my opinion. It needs to get over certain key moving averages of 21-day. But understand, there's going to be a momentum trade in there at some point in time. It's not there yet. Just respect that. FSLR had a little bit of a bounce, but it's really just a dead cat bounce off some, weak bottom. Nothing really there to talk about. Oil stocks, Chevron looks okay. Schlumberger, I took advantage of some of the EOG trade, trying to find a bottom and pattern. Not a whole lot there. Home builders had good days also, as I was saying. The home builders, Len had a standout, and Ryland actually looked good, I believe. Leading industries, based for a better part of a month, trying to find some strength again. I like how they closed. I think they're going to resume their uptrend if they didn't already resume their uptrend. And I think that's where we're at in this tape. You certainly have to be prudent. You certainly find to take some trades off the table, but respect the fact that we are at 5-6 year highs. We've gotten here with consolidation along the way. It's not 1 bar, 2 bars, 1 day, 2 days. It's a lot of backing and filling. And so we have support as we come down at numerous levels. So my fear factor that something's going to create a big down move, not there yet. As we grind a little higher over the next maybe week or two, that could change, at least from a short-term point of view. But right now, things look good. I do think, from the indices point of view, SPYs obviously have had a nice move, and they obviously are yearly highs. Qs are lagging a little bit. If Apple picks up, I believe they will start to make a move, and the IWM look good also. So that's where we're at, guys. I don't think anything's changed. I think the market looks good. It's going to give you some intraday movement. I love seeing that from a trading perspective, because if you like to be short, there's opportunity. Certainly if you like to be long, there seems to be more opportunity. But it's a trader's market right now. I mean, you can fight and argue about the ebbs and flows that this tape gives you, but the reality is it's giving you some good trades. And if you pinpoint your ideas, you'll be able to take advantage and capitalize on it on a consistent basis. I always preach, stay in the best in breed. If you're buying, obviously, if you're looking to short the weakest one. Don't short the strongest one. It keeps you on the right side of what the technicals are telling you. Hopefully, you took advantage of some of the ideas we were talking about today. Certainly, lots of them out there. Certainly, lots of good ones. But either way, the market's at new highs, and I think we're here to stay for a period of time. Have a good night, and I'll see you all tomorrow. I'm Marc Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.